Well, absolutely. If you take a look at these numbers, overall, like you mentioned, it's a mixed bag coming in for ITC. What's surprising is it's been a beat on the revenue front, but when you take a look at margins, there's a big miss coming in on that front as well. Let me take you through what these numbers look like. Revenues coming at 19,328 crores compared to 17,000 crores, which is an uptick of 13.7% on a year-on-year basis. What we were estimating at ET now was 18,068 crores, which means it's a clear beat coming in on that front. EBITDA has come in at 5,078 crores versus our expectation of 6,506 crores, a 3.3% uptick coming in on that front. So that's largely in line to beat coming in on that front as well. When you take a look at the net profit figure, 6,335 crores is where that has come compared to 6,295 crores, an uptick of just 0.6% on a year-on-year basis, but nonetheless in line with what we were expecting. However, what has surprised us negatively this time is the EBITDA margin figure that's come in at 32.8% compared to 37% this time last year. We were expecting 35.6%, which means it's lower by 425 bips on a year-on-year basis, and a big miss coming on that front. Now, let's take a look at these segmental results. For FMCG, the total FMCG revenue growth has come in at 6% versus pole of 6.5%. So largely in line from FMCG, staples, biscuits, snacks, frozen snacks, dairy, premium soaps, home care and agarbatti have done well this time. When you take a look at the cigarettes business, net segment revenue is up 7.3%. However, the severe cost escalation in leaf tobacco that we were expecting has partially been mitigated through the improved revenue mix, strategic cost management, as well as calibrated pricing actions by the company. Quickly coming to the hotels business, the segment revenue is up 12.1% compared to our pool of 10%, so a beat on that front. Agri business segment revenue is up 47%, led by the leaf tobacco and value-added agri products. However, the main pain point over here is the paperboards business. Although surprisingly, the segment revenue has come in up 2.1%, driven by exports. Our poll was indicating a cut of 4%, so it's a very positive surprise on this front. Also, let's talk about the other major announcements that has come in with the ITC results. They've approved the acquisition of 1.52 crore shares of EIH and 30.6 lakh shares of HLV. And after this, their shareholding in both of these companies has gone to 16.13 and 8.1% respectively. Overall, it's been a mixed set of numbers coming in, largely very mixed because beat on revenue, but large miss coming in on margins this time.
If you like this video, then like, share and subscribe to ET Now.